Yeah, good day, friends. Today, I am here to discuss with you about the various kind of investment. Like say, there are two ways of investing into business. You can start your own business by your own, and you can take the investment grow. Money if you are working, and you have some inclinations of starting business. So what you can do, you can choose the business of your choice. You can invest into the infrastructure to establish that business, and then you can invest into the working capital for that business. And you can start that business, and you attract the customer, you sell or products or the service, and you will earn the profit out of it. One way of doing the business is this. And second way, that if you are in service or you are involved in other business, you can buy the shares of a company who are already in the market, who are doing the business. So as of now in India, there are again various ways of investing into companies business. Like say, one, you directly buy the shares, and second way is that you are investing through some mutual fund companies. The mutual fund companies who are investing into again shares of the company, but they do on a research basis. So they are having a team of experts. They are having their own offices. They are collecting the money. They are investing into the companies in a larger chunk of shares. But they buy the larger chunk of shares in a listed company, and then they sell them when they are getting the better price of that shares. And whatever the profit they earn, they will take away their own expenses. They take away their profits, and then they share the money, the part of that profit which they earn to the investors who invested into these companies. And then the other way, that you are directly buying a share of a company to the amount you want to invest into. So when you are investing the money directly, so whatever the profit and loss you do basically by your own. So money, if you are earning good profit, it is yours. You are not earning good profit, incurring the losses, then it is your own. Okay, but the way, like if you are do a small study about the company, or you are taking the help of the broker to that matter, and if the broker is doing fundamentals and then do technicals and all, so he can advise you to invest into a company in a better way. But you will not be able to find that the particular broker who is having that idea, or the interest into the fundamentals, or interest into the technicals. So if you see that you in a small town in India, still you are having the access to the sub brokers only. So you will not find the financial consultant money easily. Second thing is that how much you believe into your advisor or the broker even. So if your broker is advising you to retain the investment, or it is getting down and he's telling you to hold the investment, see then if you are following him, you may get the good results. So money selection of the company, the fundamental of the company, and the future plans. So many things are depending upon the share price of the company may go down because of the market scenario, because of the economic scenario, or even the 1 quarter or 2 quarter bad results. But if company is having a good business plan for future, it may down for some time, but it will grow again. So, money, if it is a good broker, and he will advise you to hold the stock, or even invest more into it. So, money, finding the good advices, and some money, what I my experience into the share market is, like say if you are having a client, I am a client to a broker suppose, and then he used to advise me for some time, and I invest the money according to his advice only. And once I start getting the profits, so I feel that now I know everything. Now I can do my own. I have invested into it. Then the person in money who is investing money, start advising the advisor, and he may be getting the, once you start investing into some companies, so your data might be spreaded. So you will be start getting the various SMSs, emails, or then this share has gone from this position to this position, that position, invest into it, and this will go like this. No? So you will get the 100 times return out of investment. Or people start fascinating about that, and then they insist the advisor why not to invest into it. And if he study the company and he say that it is a fake share or it is a fluke, so once he advise you not to do that, so people start thinking in such a way that he is not want me to make money. Like say it is very easy to land up buying the shares of that fascinating companies. So if you are not exiting well within time, like say there are SMEs who are floating. We used to say that penny stocks. So if you get a message and that message is going to lakhs and crores of the people, and they start buying say 100 shares, so there will be demand in shares and then there will be price increase. And every day you will find that there is a circuit, 5%, 10% circuit on these stocks, upper circuit. The price increases when, because SEBI is having a deadline that you can't get the increase in a particular share more than 5% or 10%. There is a capping in a day stock. So you will see that that capping is happening continuously 5, 7 days, 10 days, because the demand is there now. And then people are buying madly. And once I see the fundamental of that company, they are having zero sale, zero profit for years, and there is no change at all. But the share price is increasing. So after certain period, when the demand stopped, when people understand that they have bought the enough shares, now the people who buy at a lower level, they start selling at a higher level. So once the sale started, then there will be again a circuit, but it will be a lower circuit. Then there will be sellers but no buyer at that price. So you will not end up coming out from that investment. You are seeing the price, but you are not able to invest money coming out. So ultimately, what you will see that you buy a share penny stock of such rumor at suppose a 5 rupees, and its price goes up to 50 rupees, and then you want to sell now. So you will see that the price goes to 2 rupees, then only you will be able to sell. Then you will find somebody who is buying or who is selling, and still there is a mess. And we don't know that how long it will take, 1 year, 2 year, 3 year time to get the volume at that 2 rupees even, because there is no background of the company, there is no profit, no sale. So once somebody is advising you to invest into share market, so first either you get the knowledge or start realizing upon a person who has some knowledge about the study the financial status of the company. So if somebody is advising you to not to invest into, so please stay away, because there are n numbers of company who are just running on these kind of investment only. So once you are investing, so invest wisely. So because everybody has no guts to start a business. So there are companies, people invested into these companies years back, and they end up making good money. But if you see today scenario, like say my Dadaji invested into some company and he kept that share with him. Like say you will find the emails, like somebody who invested 1 lakh rupees in Reliance in 1977. So today that 1 lakh rupees value is 1.87 crore. But are we investing into a company like this? 90% of the 95% rather I should say investors are who want to make money, quick money. So like say if the Reliance share today is say 2500 rupees, and if it is goes to 2750 and I am getting the 10% profit out of it, most of the mutual fund do that only. So if I am getting 10% profit, I sell the shares and I book the profit. And by doing this cycle again and again, I may get the double of my money in 2 years' time, or 3 years' time, or 1 year time, even for that matter. Or if I am lucky enough, I may get in 6 months' time. Okay. So the thing is that if we are doing this for a certain period, so my pattern of investment is a short-term pattern. So most of the investors are short-term investors as of today. That's why the share price gets fluctuated every time. Okay, if everybody is a long-term investor, nobody will sell and buy. People will invest and then they sit and then they forget the even their demat account. And then after a certain period, they will start thinking that the money which I am paying to the demat holding, it's again a pain for me because I am not getting money out of it. Like say, for argument's sake, I can say the house in which you are living has no value. You may buy at 2 lakh rupees and their price as of today may be 20 lakh or 2 crore rupees even. But it has no value because you are living in this house. You are not going to sell it. So the investment which you made in a particular share in a company, and if you are not booking the profit, it's an investment. You can see, and then price goes up, price goes down, and then you are thinking that I have invested 1 lakh rupees, it is of 1 crore today, it is now 50 lakh, it is now again 1 crore. So you are just seeing that fluctuation. You are not getting a benefit out of that fluctuation because you are not booking the profit. So if you are choosing something for making money, so at least when you are having opportunity, you should make money out of it. So this is the initial talk which I want to start on a share market from today onward. So I will be just sharing the data, I will be sharing the information about the share market and particular shares in future also. So keep watching my videos if you feel that I can give some valuation to you, and you can reach to me on the credentials given below, and you can comment on my this video so that I can get the information and I can revert to you. I think it will be beneficial to you, and if you want to contact for investing, so you can definitely talk to me. Thank you very much. Best of luck.